Curious about our July 2023 trading results? Join Laban Johnson, CMO of Abundance Asset Management, as he interviews Chris Perkins, CEO and Chief Trading Officer. Learn how the Abundance strategy on the Invesco QQQ delivered 1.93% growth in July.
Results are following the models exactly as we predicted.
Discover the key principles of our strategy, how we manage risks, and why we aim for consistent returns.
The only way that people are going to learn this stuff is through their own experience, or like my grandfather says, through someone else's experience, right? When the stock moves drastically up or drastically down, we don't feel those movements as much. It's like 20-year overnight success story kind of deal, right? Right. It appears to people on the outside that it's, really fast, but it doesn't happen that way. It's like a series of compounding knowledge over the course of decades. Main points of the strategy is that we don't spend a bunch of money on analysts trying to pick stocks. We don't try to predict market movements. We generate cash flow, and we control the things that we have control over. We do not control the price of the stock movement. We do not control the price of the option movement. We control our reaction to those things. And through that control, profits will be the byproduct of the strategy over the long haul.
Don't miss this insightful interview. If you're enjoying our content, don't forget to hit like, subscribe, and click the bell for notifications to stay updated with Abundance Asset Management. Now, let's jump right in.
Greetings, friends. I'm Laban Johnson, CMO of Abundance Asset Management, and I'm joined once again with Chris Perkins, CEO and Chief Trading Officer, Abundance Asset Management. Hello, Chris.
Hey, how's it going, Laban?
Great. We're just wrapping up. We've just wrapped up the 5th month live trading, July 2023. The 5th month of live trading, the Abundance QQQ, but the Abundance strategy on the Invesco QQQ. Chris, how are we doing?
We're doing just fine. The results are following the models exactly as we predicted. So the QQQ kind of rocketed up again in July, returning 3.86%. There was a massive rebalancing that happened this month. We can talk about that in a little bit here.
Sure.
But the AAM return was 1.93% for the month of July. This is a trading result. And then we're only, as it sits right now, through the whole month of July, we are only between 60 and 70% still in cash. So we're only between 30 and 40% invested in stocks.
Wow. Okay.
So without being fully invested in the QQQ, this is really good results because our method is designed to kind of cushion that volatility, right? And volatility works on the way up and on the way down. So when the stock moves drastically up or drastically down, we don't feel those movements as much.
So how was trading this month overall? What was your experience on the quote unquote trading floor?
Yeah, the trading floor on my laptop. Much more peaceful than the Wall Street trading floor.
Right.
It was as per normal, like I just keep controlling my emotions. It's just mathematical plays is all it is. And we're just picking up crumbs over and over. And so we're simultaneously renting out shares by selling calls, and also selling puts at the same time. So every market fluctuation, we just take a little bit of profit here, a little bit of profit there, place a new trade, so on and so forth. So just keep picking up crumbs, and those crumbs will keep compounding over the long term, right? So that cash that's created, it's a little bit different nuance of income than just share price appreciation, because it's realized income, right? It's realized cash in your pocket income rather than just like the asset value went up, so your net asset value went up, and it can go down just as easily as it's gone up, right? Except with the strategy, it's not quite like that because we already have the cash in the bank.
Amazing.
It's realized gains. Yeah.
Right, realized as opposed to paper gains. A big difference there. And I think that's we can't highlight that enough, right?
Yeah, and it is it's something that's underestimated because you're just constantly picking up crumbs, and those crumbs eventually will make you a loaf of bread. Right.
That's a good way to put it.
Yeah.
Make some
As far
toast.
as as far as analogies go, right?
Delicious toast.
Yeah, exactly. Yeah, with the rebalancing, that's one of the benefits. So it can be a double-edged sword, right? The rebalancing can be a double-edged sword where the QQQ has parameters, and like I don't want to get into the details of the parameters on the call, but essentially they can't have too much of the allocation into one stock.
Mhm.
They can't have too much of the allocation into the top 5 stocks or the top 10 stocks, right? So they've got to, once when a stock really goes on a run, like Apple did this year, Nvidia, Tesla's gone on a run this year. When they do go on those runs, then the QQQ ETF is forced to rebalance and sell off some of the stocks that really went on a run.
Right.
Because
It's
it
not nothing
takes,
they did wrong. It's just that those stocks just grew so fast that they kind of rotate, they eating up too much space, right?
Yep, yeah, they're taking up too much space in the portfolio, and then it also, enables them to diversify. And that's one of the benefits to us, is that we don't have to worry about trying to rebalance and re-diversify, and when should we sell this, when should we buy it? We don't have to worry about any of that stuff. We leverage the QQQ for
It's done.
those services. Yeah,
It's done.
yep,
Awesome.
saves us and our investors a lot of money.
I mean, that's a huge advantage, and it's just an advantage that's built into trading that asset. How did you come about this strategy? How did you learn that about the QQQ? Like that was the asset to apply this strategy to. How did you get your start in the world of finance, and then what led you to developing the strategy?
Oh my goodness. Yeah. It took it took me 18 years to get here.
Wow.
Altogether, right? So I mean, I don't want to go too far back, but if you go to my LinkedIn, I've been doing some posts about like where I very first started with the restaurant business. So
Hmm.
my LinkedIn profile, we can put that in the comments or
Sure.
whatever. And then we my dad helped me out a lot growing up, and just like mostly with mindset, and just like, are you going to work for somebody else, or are you going to own your destiny and own your future, right? And
Mhm.
so yeah, just kind of through that, the restaurant business was always a stepping stone for me. I knew that I didn't want to do that forever. Life expectancy of people in the restaurant business is not high, because it's a very stressful business, and the failure rate is very high in the restaurant business. So I knew that I didn't want to do that forever. I wanted to be a real estate investor, was what I originally, what kind of unfolded as the restaurant business matured. I wanted to be a real estate investor. In order to be a real estate investor, need to have quite a bit of capital. So the restaurant was feeding that capital into my real estate business, real
Okay.
estate investing company. And then I slowly grew that over the course of 15 years simultaneously, while owning the restaurant for part of that. And then, people were kind of talking about living this dream of working remotely and not having to be in an office, and, or, be physically located anywhere, and have this mailbox money, if you will, where renters from the properties pay you every month, and it shows up in your bank account, right? Sounded pretty ideal to me. I was able to
Okay.
live that lifestyle for about 6 years.
Hmm.
And then things started to kind of crumble at that point with the real estate, because the business that I sold, the restaurant business that I sold, they ran it into the ground over the course of four years. So I was able to actually kind of pivot my way out of that and sell the building, still for a profit, vacant building for a profit. But it kind of opened my eyes to, we had a 10-year lease agreement deal there. And this is, information that I figured out later on, is the piece of paper and the contracts that you sign with people are only as good as the paper they're written on.
Right.
Actually, they're as good as the people that are
The
behind
people behind the
signing
paper. Yeah.
that piece of paper, right? So,
Right.
they were kind of painted into a corner as well. There was a series of unfortunate events that happened. The city that the restaurant was in was heavily oil based and farming based. Commodities took a hit in 2014, as we all know, especially oil. So there was insult to injury there, but they didn't run it as well as, it's hard to say if I would have made it through that as well, but I'd like to think I would have. Um, So it just made me really think about like, what is the risk that I'm taking, right? I have a very concentrated risk. I have millions of dollars tied up in buildings with one tenant in each building because they were commercial buildings, right? Commercial standalone buildings. So it's like if one tenant doesn't pay, that building is now a liability.
Right.
And massive liability. When you're sitting with a vacant restaurant or a vacant building of any kind, the insurance skyrockets, right? Obviously you got to come up with somewhere to pay your mortgage if you have a mortgage on it, property taxes, all of these costs, utilities. All my rental agreements, lease agreements were all triple net, which means all costs are on the tenant, right? So with all costs being on the tenant, when you don't have a tenant, where did those costs come back, right?
Exactly.
Right. So it comes right back to me. So I personally think that risk in real estate is really underestimated for the most part. I can't count how many times I have heard people say, "Oh, you can't lose money in real estate," to which I'm like, give it time.
Hold my beer.
Right? Yeah, hold my beer. Yeah, that's kind of what I want to say, but it's like it's just experience. The only way that people are going to learn this stuff is through their own experience, or like my grandfather says, through someone else's experience, right? And unfortunately, I had to make some mistakes and had a rough road as well through all of that, but I learned from them and I still want to live that remote lifestyle. Investors that I talk to now will not invest with an operator that isn't boots on the ground or doesn't have a boots on the ground team to manage properties, because it's like when the cat's away, the mice will play, right? And if you have tenants that know that you're not physically located anywhere and you don't have a team with boots on the ground in their location, they will mess with you, right? They'll take advantage of that when times are tough, especially when they're painted into a corner as well. So again, just getting back to managing assets digitally, but also cash flow, right? I always thought like you buy stocks, you hope they go up. If they go up, fantastic, you're a champion. Now what? Right? Most stocks that are heavy growth stocks and tech stocks, which is what I believe in, they don't pay a dividend because they put all their money back into R&D, developing new products and things like that. So it's like, okay, how do I can't live off of a stock going up because I'll either have to sell the stock or it's just numbers in a screen, unrealized profits, just like we just talked about, right? So I started to look into options as income and cash flow, right? And I started off by buying options like most people do, and didn't know that I was gambling at the time. And this was for almost 5 years ago now. But I started off buying options, not knowing really anything about what I was doing. And I made a whole bunch of money in a short period of time, and then almost immediately lost it all. And I'm like, okay, I have to like reevaluate everything I'm doing here and really focus on a vehicle or a strategy that I would be comfortable putting my entire net worth in. Once I come up with a strategy that I am 100% comfortable putting and confident and can trade with no emotion attached to a trade, that's when I'll have a scalable vehicle for other people to invest in as well and save them the difficulty that I went through as real estate, in the stock market. I've been through tons of struggles over the course of 18 years, as one can imagine, right? It's like 20-year overnight success story kind of deal, right?
Exactly.
It appears to people on the outside that it's, really fast, but it doesn't happen that way. It's like a series of compounding knowledge over the course of decades.
Yeah, they just weren't paying attention for the last 19 years.
Yeah, exactly. And within the investment fund structure, like within Abundance Asset Management, we just kind of looked at what the majority of public equities funds do wrong, and then we're like, let's just not do that. We'll be all right. Let's not try to pick stocks. Let's not use a bunch of leverage. Let's not trade where we could potentially be forced to realize a loss. And simultaneously, we can also invest for the long haul, but just selling options, right?
It's amazing.
Generating cash flow and realizing gains rather than putting off gains. You know,
Right.
just having gains is great, but when they're not realized, they can be lost.
So that leads right into the next question, which is going to be like, so you developed the strategy. What are the key principles of the strategy, and what sets it and the fund apart from other traditional strategies and funds?
The main points of the strategy is that we don't spend a bunch of money on analysts trying to pick stocks. We don't try to predict market movements. We generate cash flow and we control the things that we have control over. We do not control the price of the stock movement. We do not control the price of the option movement. We control our reaction to those things. And through that control, profits will be the byproduct of the strategy over the long haul. And so, you know, people always want to see like green, you know, you want to see green results, right? You want to see everything perform. And, you know, that's one of the difficulties of what's happening is we are performing, but, you know, we were kind of talking before this call is like, I kind of wish we would have a negative month every once in a while, because I don't want to give people these rose-colored glasses, right? That we're going to be green every month. It doesn't work that way in the stock market. It doesn't work that way in real estate. It doesn't work that way in any investment. So I don't want people to come in with rose-colored glasses thinking every month is just going to be 2% every month. You know, we are a cushion for volatility, and we don't use leverage, because half of all public equities investment funds or hedge funds go broke because they're over leveraged. And that's what forces them to be liquidated in market crashes. So we will never be forced to liquidate shares at a loss, because we're never in margin. We're never using borrowed money to trade stock or trade options.
It's a lot of discipline just to not do that.
Yeah.
Don't open that door, right?
Yeah, exactly. And always kind of keeping some liquidity there for investors, right?
Well, that's
it's a lot. It's a lot to unpack there.
There is a lot to unpack. It's a lot to learn. Of course, you're always available to answer anybody's questions if they have questions about it, or want to explore it a little bit more and see if this is something that's right for them. What's the best way to reach you, Chris?
Through email, LinkedIn, Facebook, any and all of the above is fine.
Chris Perkins on LinkedIn. He's Chris Perkins on Facebook. Of course, we have the Abundance Asset Management group on Facebook, which is a great place to reach us. That we can make sure it's the right Chris Perkins, not a cheap knockoff. Right?
We can also put the social media links in the description if you want.
Sure.
Yeah.
But yeah, so we've got the Facebook, we have a LinkedIn page, Abundance Asset Management as well. So you can reach us there. Of course, our webpage links to all of those as well, abundanceassetmanagement.com.
Yeah.
All right. Well, awesome, Chris. Thank you so much for joining me. Good luck in August, and look forward to getting back together in the beginning of September to find out how August went.
Awesome. Have a great day, Laban.
Talk to you then.
Yeah. Bye. Find out more at abundanceassetmanagement.com or join our Facebook group. All investments include risk. This presentation is for educational purposes only, not a solicitation of a security.
The conversation doesn't stop here, folks. Want to stay updated with our innovative investment approach and gain more insights into financial growth? Then it's time to join us on Money Talk. Money Talk by Abundance Asset Management is a platform where finance meets clarity. Here, we break down complex investment topics into digestible bits, enabling you to understand and make the most of your investments. Whether you're a seasoned investor or just dipping your toes into the financial world, Money Talk provides valuable resources, enlightening discussions, and a community to engage with. So don't let your financial journey stop at this video. Click the link below to join us at Money Talk, where we make finance make sense. See you there.